Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Good to see you once again.
Good to be here.
All right, you ready for today's question?
I'm ready.
Here it is. What are assets and liabilities within a retirement account? I think you think it's all assets, right? It's my retirement account. It's going to let me sit on the beach forever. So
Yeah.
what do you say? What are assets? What are the liabilities?
Well, this viewer's probably got a plan in place. So now he's had somebody tap him on the shoulder and say, you need to look at your assets and liabilities, and he didn't know what that was. And he probably never thought about that before. You know, an asset is something that's going to increase your account. Simply put, I mean, that's what it is. We're talking about financial tools within the account.
Right.
Now, a liability, though, that's going to be something that's going to decrease the value or take value or money out of the account. So if we look at what's an asset, what's a liability, and can they change, can they adjust? Well, if we look at assets, things that increase, you can look at dividends. That's, you know, you get a stock, it might have a decreasing value, but it still might pay a dividend. So it's creating dividend income. That's going to be classified as an asset. Interest, earnings, income, any type of appreciation of your value is going to be an asset to the account. Any type of guarantee, if you have a tool within your account that offers guarantees, that's going to be an asset.
Okay.
Anything that pays you, you might say, inside that account. Now, liability, that's kind of an easy thing. It's cost, risk, or volatility could be a liability. Right now, your asset you thought you had in January might have become a liability by February.
Might not be quite as, as robust as it once was.
Kind of in the middle there, stocks, mutual funds, bonds even, those things can fluctuate in value. So I think we have to constantly look at what that is. Can we determine it to be an asset or a liability? Now, you know, true assets are going to be solid in both benefits and value or performance. So I think a true asset is something that is going to be offered regardless of economic conditions, whether that be the guarantee of the value, an interest rate, or a benefit like a income benefit or anything like that. Those are hard assets that can't fluctuate. Those are what we can really rely on as we get older. Now, when you approach retirement, most retirees are looking for stability, all right? So when you look at assets versus liabilities within your retirement account, as you get older, you're probably going to want more assets.
Eliminate some of the potential liabilities.
That's right. And as you tweak that and as you review that every year, I think it's very important that we keep an eye on what is a liability in today's in our life today. I may be 20 years older than I was when I started my retirement account late in life, but now those assets that were liabilities, but I held on to them for growth and value, now I really have to evaluate the risk and volatility of that. Like we've discussed, managing risk might be more valuable than managing growth.
Okay, good to know.
Now,
you got to learn to identify them, though.
Well, you do. And so we look at what would somebody say is an asset within a portfolio? Well, a REIT. That's a real estate investment trust. Now, REITs were great, right? Early, like there were some REITs in Las Vegas paying very big dividends. But what happened when the housing market crashed?
Yeah.
So that REIT became a liability because it lost a lot of value. And now REITs are kind of coming back because of the values that are being bought at a discount in real estate, whether it be strip centers or housing or whatever, they get good value. So REITs, I think we could classify as assets that are managed correctly. Bank CDs, obviously, they've got some security to them. They don't pay anything,
not going to pay a lot, but they'll be there when you need them.
Those are their fixed or indexed annuities. I think we can classify those because of the guarantees. Government bonds, and you know, you look at that, they have kind of a historical value of paying. Now, can they decrease in value? Well, they're not guaranteed. They could. Same way with some municipal bonds. They've got good tax advantages, things like that. So I think you just have to constantly look at the tools that are within your portfolio. Now,
Exactly. Now, what the bottom line is that you need to know what the assets and liabilities are. Think about where you are in your lifetime and your targeted retirement date. Talk to somebody like Bruce Porter.